Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 2nd, 2015. We're looking at inside the numbers tonight. What we're going to talk about a little before we get going here is a batting average. We're going to do the SPY and the E-mini contract. We're going to get into next week's market, what we expect, crude oil, gold, interest rates in the bond market, and we'll talk a little bit about the U.S. dollar. And let's get into it. All right, so I said we were going to talk a little bit about a batting average. So what I want to do is I want to show you three trades that we put up yesterday for the members. Okay, the first trade was UNP, and this one is they're all three are swing trades. So these are meant to be held anywhere from 1 day up to a few weeks. And this one is underwater by about, depending on where the entry was for different members, could anywhere be actually slightly positive up to down 30 or 40 cents. And what happened was, as soon as I issued the trade alert, the market or the trap door opened in the market, and UNP dropped like $1 in like 10 minutes, right when I hit send on the email that went out to the members. But nevertheless, it climbed back, and we're just short of even. Most members are at least just short of even. So let's look at the second trade. So this is meant to be held probably several days to a couple of weeks. Let's look at the second trade, Zillow. All right. We entered Zillow. I'm going to go to a hourly chart on this one just to give you a better view. We entered Zillow at about 97.10. Okay, that's when the trade alert went out. It was trading at 97.10. Okay, and today we finished at 100.88. That's pretty good. We're up about 4, maybe 5%. What are we up? I don't know exactly. Either way, we're up $4 in no time, 1 day. Okay. And that's the power of knowing what the indicators are telling us and what the pattern is telling us what's coming next. Doesn't work every time, but it certainly works a lot of the time. Anybody that's been getting the trade alerts knows that we've been just, we've been hitting, a lot of base hits and doubles right away, right out of the chute. Okay, so what was the third one was Bank of America. And here's an example of where we have something for everybody. Some folks like the higher momentum names. Some folks like the slower moving but more safe or risk adverse names. And right now, this would fall into that category. And what happened here is we issued the trade alert down here. Okay, 1538, I think the number was, and we're at 1553. Now, it's not a huge gainer, but it's headed in the right direction. And you can see now we're above the 50 and the 20 period moving average. We're making a bullish pattern here. Okay, we had a nice big up move, and now we're building up pressure for hopefully another move higher. Ultimately, into the first target would be into this 200 period moving average of 1588. On a percentage basis, that's a nice gainer on a $15 stock. Okay, now this is just a slower mover. Now, that's not saying this is the upside target. This is the first area of resistance we're looking for. The upside target is higher. Okay, when you look at the daily chart, okay, you're looking, first target is over $16. First target is like 16 and a half. Okay, that's the first target. All right, so we're looking for 5, 10, 15, 20% gainers in short periods of time, and we're getting them. And as long as, like when you go back to a Zillow, and as long as anybody that took this trade, as long as you have at least a break-even stop, preferably an in-the-money stop right now, you've guaranteed yourself a winner no matter what happens. I mean, this thing can keep going up, and if it comes back in and you get stopped out, you can't lose. And those are the type of trades we like. All right, let's go back to the spider chart. And we'll take a look at today's activity. Today was a quiet day. It's the last day before a long holiday weekend. So let's get into what we expect for next week. I mean, there was nothing going on today. We had a little bit of an up move. We'll just take a look at it. We had an up move, and then we went sideways all day. But this is good pattern. This is bullish behavior, okay? So this is looking to go higher. When you look at the hourly chart, all right, again, this is bullish behavior. As long as you stay above these lows, that's in a bullish position. So what's the ultimate bullish position? As long as we stay above 204 and the corresponding level on the E-mini contract, for those of you that like to trade the E-mini, is basically 2033 down in this area here. 2033 is your line in the sand on the E-mini contract. And in the spider contract, it's 204. Okay, 204 is the line in the sand. What happens as long as next week we remain above 204? Well, the first area of resistance is going to be this convergence of the 20 and the 50 period moving average. If we can give a hop over these moving averages, we'll get off to the races, okay? But you got to get through these moving average. Preferably, we'd love to see a gap up on Monday over these moving averages, and then the market just goes from there. I don't know if that'll happen. We have some geopolitical activity, and we're going to talk about that a little when we get into oil. So there's a little bit of a wild card there, but this is the range we're in. Right now the range is the top of this candle here, which is 209.35 down to 204. That's the range we're in right now, obviously, right? We're in this range. We're going to break out of this range one way or the other, and when we do, it should be a good move. What happens if we break down from this range? Well, you'll find some support down here at the 200, but because we spent a lot of time up here, the 200 is not going to be formidable resistance, and you may find yourself going back down as low as this area here at 191.5, 192, but hopefully not, and maybe you'll find some support at 197 and then maybe 195, but we don't have to run those calculations until we break below on a closing basis 204. We'll worry about the downside if we have to. Okay, let's go over to crude oil. Speaking of geopolitical activity, we had to deal with Iran, right? And this is the make a deal with Iran so that they're going to pretend they're not producing a nuclear weapon, and we're pretending to believe that we believe that they're adhering to the agreement. And that's the type of agreement these things are. So, they're out 10 years, 15 years, 20 years for certain things. Nobody in government today is going to be here, or maybe most won't be here by the time some of these provisions have to come to pass. It's all nonsense. They're building a bomb. That's what they're doing. Iran is building a bomb, and they're not going to stop doing that. But so what do we have with crude oil? Well, it's all how it's perceived and geopolitically. You can take two stands. I could build a case either way. I could say if we make this deal with Iran, and the sanctions that were imposed on countries being able to do business with Iran are lifted, and Iran is able to sell oil into the open market, then the price should go lower. More supply, lower prices. Okay? Is there a case on the other side? Well, we're letting Iran enrich uranium. We're pretending that it's a lower level than they're actually going to enrich, and the world gets nervous, and the geopolitical tensions spike up, and sometimes that could have a spike up effect on the price of crude oil. And what would that look like? Well, we would get back into this range. We tried today. We pierced through this channel, our zone. We pierced through the underside today, right into the 50-period moving average, and then we couldn't do it, and it repelled away. If we can jump into this zone and we can close the day in this zone, the odds or probabilities increase that we start to work our way to the top of the zone, which right now is about $55, $56. And do we ever get up that high? I don't know. First, you have to get up to 52.5 from the other day. That was the high from the other day when we had that great trade from up here. Okay, we caught $3 in this trade here. Okay, but now you're still fighting this zone. So we'll have to see. There's nothing telling me we get into or don't get into this zone, Monday or Tuesday or Wednesday, anything like that. I don't have an indication yet of something that should take place, but when I do, I'll let you know. Okay, so let's go over to gold. And gold had a little bit of a pullback today, but that's expected after a day like this, a $20 up day. You expect a little bit of a pause to slightly down day to work off the short-term overbought condition. That's no big deal. Higher prices should be coming in gold. On our first area of resistance is going to be we're going to call it 1240, which is right above the 20-period moving average. Could there be another day or so of sideways goings on over here? Sure. If gold got back down to 1275, 1280, buy some more. That's basically the way it is. There's higher prices coming in gold. let's look at GDX. And GDX had a slight down day today, mainly because gold had a slight down today, I'm getting tongue-tied. But basically, it's the same routine. When gold catches a bid, GDX is going to catch a bid. And when gold catches a bid the same day that the market catches a bid, GDX is going to go up exponentially, and your upside target for GDX is going to be about 22, okay, up to this 200-period moving average. First, you have to clear these highs on a closing basis. Basically, you have to close above $20 in order to have a shot at 22. But right now, we're in good shape. We've made a low, a higher low, and another higher low, and hopefully this higher low will hold, which means higher prices are coming. And we can see maybe this was an A, B, and then the C goes up from here. And we like to do those A, B, C corrective patterns. They work out a lot of the time. Let's look at the interest rate market. We'll look at the TLT was down today. And yesterday, I talked about this being in the no man's land. We were buyers here. We were sellers here. Now we're in no man's land. I'm not sure of which direction it's headed day by day. So therefore, we're going to wait for the chart to tell us and wait for the market to tell us what to do. And until that point, it's a no trade. And sometimes a no trade is way better than a guess trade. Usually a guess trade means you lose money. A no trade means you keep your money in your pocket and you allocate your capital to something that has higher probability. We don't really care what it is. If it's the bond market, fine. If it's a stock in the stock market, fine. If it's gold, if it's oil, if it's an energy stock, if it's a technology stock, if it's corn, if it's orange juice, if it's copper, we don't care what it is. All we care about is the chart and the pattern, the price action, the money flow, the momentum is telling us what's coming next. And when the probabilities are in our favor, we take the trade and we expect that 8 out of 10 times we're going to win on that trade. Let's go over to the dollar. And basically, what we're looking for is the dollar had a down day, and we're looking for the dollar to work back into this zone here. This is where we want to be buyers of the dollar, okay? Until it gets into this zone, I'm going to have a tough time being a buyer of the dollar. I really want to see, in the 95, 95 and a half, 94 and a half area. When we see prices like that, I'm going to be buyer with 3 hands, okay? That's about it tonight. Oh, until that time, I'm not going to be a buyer. So I'm not going to chase the market. If it turned up from here, I might look for an entry point at some point in the future from that. But if it came down here on this move over the next week or 2 or 3, something like that, I'm going to be a buyer of the dollar. All right, I think that's everything that I wanted to run by you folks tonight. Hopefully it's helpful information. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.